Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We're seeing the euro recover from lows that did not quite take out the front month contract low of the year at 111.25 area. So we returned higher and actually ripped back above 112. This first we started seeing selling after the ECB policy statement. No, they didn't cut rates, but they telegraphed that you're going to see some action soon, and you're going to see asset purchases. You have TLTRO coming down the pipeline as well. So this was ultimately a dovish statement outside of not seeing a rate cut. But what happened was ECB President Mario Draghi during his press conference said he does not see a recession as likely. Now, if dovish Draghi doesn't see a recession, he's not worried. Yeah, the euro moved higher. It's settled back in a bit here, right around the 112 area, actually pushing back below 112 a bit after better than expected data from the U.S., durable goods, weekly jobless claims, as well as wholesale inventories, all came in better, and really that just sort of helped edge the dollar index and edge the dollar up here as the session has unfolded. This comes ahead of a crucial read tomorrow, Q2 GDP. It's the first look. Expectations are wide, but we're looking at about 1.8%. We've seen things 1.6 all the way up to just above 2%. So it's going to be interesting to see what this comes in tomorrow. Again, it's the first look, a better than expected number. It's going to help fuel the dollar higher. The dollar is up against a wall of resistance, 97.75 up to about 98.25. The same way the euro has a lot of support, all the way down to about 111.25. You get a close above 98.25 in the dollar. You get a close below 111.25 on the week in the euro. Now, this is a weekly close. You're going to get a directional move heading into next week, so keep that in mind. Don't stick with any losing positions in there if you're fading this overall into the weekend. You don't want to start next week like that. But again, if we come in worse than expected on the GDP side, you're going to see things pare back from the highs of the dollar. We have a lot of support in the dollar coming in around 96.75, 97. You have a trend line there. You have retracement levels there. The 50-day moving average. Same way in the euro. We're looking at strong resistance, 112.55 all the way up to 112.90. So any directional moves higher in the euro and lower in the dollar are going to see a lot of support in the dollar down there and resistance in the euro up there. So keep an eye on all of that. And then moving on to the yen, we're seeing safe havens take a hit. Again, better data in the U.S. Has put pressure on treasuries, gold, the yen, as well as the dollar has moved back here in the session. Ultimately, too, the yen, we said over the week, it was trying to find some support against the top level of a major 3-star level. Now it's tending to move lower. We've been cautious on that, waiting to see some stability. It just hasn't happened. But now we're in the lower end of this major 3-star support at 92.30. Keep an eye on it. Listen, there's no reason to force any position on the yen here. If anything, this GDP data in the U.S. comes in a little bit better, not a whole lot better, but a little bit better. You're seeing Goldilocks, where the stocks hold well at or near record highs, and you're seeing the dollar strengthen just a bit. That's not good news for the yen. So be nimble, don't force any positions there. And then looking at the Aussie dollar, like I said, we do have a trade alerts trade out there for anybody who is aggressively doing this on their own. They have a bearish position in the Aussie right now. But overall, what you're looking at is the Aussie is below a trend line, and it's below the 50-day moving average, and it looks to be weak, but it's had about 3 or 4 days in a row on the downside. It could be due for a little bit of consolidation, but again, we are below support right now in the Aussie. Now, looking at the Canadian dollar, again, I've talked about it here. The Canadian dollar is really the best performing currency against the U.S. dollar from all the currencies we cover, and we're moving slowly into a level of support that we like, 75.60, 75.70. Watch that as being being a good buying opportunity. It's held decently. Crude seems stable, so keep an eye on that. We like buying the Canadian dollar there for a wave. Again, give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us, info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.